Righto, money miners. Enjoy these two faces here. You won't be seeing them for a couple of weeks. Boys, you're going over to the, and we're going to get into going over to the hotspot.
We are.
Africa.
Fly out tonight, Matty.
Yeah.
Got a bit recorded though, so you won't be completely rid of our faces.
Leaving me unsupervised for a fortnight. Sorry if the director's special ain't out at 8:30, just letting everyone know. LGC will be all over that.
Make it work.
Right. Catch it, buddy. I'm sure you've got a big schedule at Indaba, but, mate, bloody say good day.
Exactly. Get in touch. We're going to be there for quite a while, as well as a few site visits to different parts of Africa that I'm very pumped about, Maddie. But more importantly to the money miners, there's been a lot happening over the weekend.
News.
Yeah.
There is bloody news. Right, bloodbath on the U stocks, mate. Bellevue's quarterly out. Bit of M&A.
Fortescue buying Red Hawk. When's the last time you saw Fortescue buy WA iron ore project? Right? They've always just said we've got enough iron ore. They're buying Red Hawk.
I had a Red Hawk hat on my table from ages ago too. That's the first M&A deal with a hat I owned. Random fact. JD, bit of bloody bit going on in the Congo as well, unfortunately.
Yeah, the tin barons would be paying close attention, but there's been some very unfortunate events in the east of the country there that we'll touch on and try and make it relevant to our audience, but quite a bit going on and obviously a long history with all that sort of stuff happening there.
Right, let's get into it. I'll bring up the bloody uranium watch list. Holy snapping duck shit. There's some red and there's some double-digit red. Look, like Bannerman down nearly 20%. Bloody, Deep Yellow down 17. Oh, yeah, she's Boss and Paladin down 11 and 10 each. So, yeah, some big moves. And probably look, I was celebrating Australia Day and the public holiday and I missed it till Trav pointed it out this morning, I won't lie. But the Kazakhs put out their Q4 update. They work on calendar year. So they pumped out, got the announcement here, 6,519 tonnes of U. So U308, you times that by 2.6 to get £1 million. So that it was a 10.5% increase in production since their last quarter, which was 5,894. And look, maintaining 2025 guidance, already exceeded the guidance upper bound rate of 26,500 tonne a year for 2025. And it also announced that JV Inkai, the one that is Kazatomprom and Cameco, has recommenced operations. I got a laugh out of this old praise keck on Twitter, querying if Cameco announced that Inkai had resumed operations after reading Kazatomprom's announcement, like inciting that possibly they just found out that way.
Along for the ride.
No, I've got a good bloody laugh out of that. And another interesting point for the Kazatomprom update, if you control F acid, no results. One of probably the first announcements in a while that has not mentioned anything about sulfuric acid issues or just sulfuric acid in general. Found that very interesting.
We'll have to go listen to the call. I'm sure there must have been a question or two.
Yeah, I didn't get to. I'll have a bloody
on the topic.
Listen to that later. But yes, it was. I probably surprised the street. I think that it was a bit more bullish for what is coming out of Kazakhstan compared to a lot of people pricing in. They'll a potential downgrade for their 2025, but it doesn't look like that's the case at the moment. So yeah, she went the other way.
Combine that with the deep seek, which is just throwing the market into a real conundrum, which I imagine has had its implications on the U stocks, where a lot of the bull thesis was from big data center build out. Might be a risk.
Can you explain what DeepSeek is, please?
I mean, for the money miners to cut straight to what really matters, why it matters for the U names is way less power is going to be used. That's what's taken the sting out of the narrative. And like, what a bloody week. The same week you had the news of the $500 billion Stargate project. You know, the first question everyone asking, where's the power going to come from to power this US theme? And then the Chinese, momentarily sort of proving that, hey, you might not need as much power as you think
Because we've got a better
The
AI tech.
Yeah, the algorithm was supposedly trained on only $6 million. Like it only cost $6 million to train that algorithm on the data, and every time its OpEx is substantially lower whenever you put a query through to it as well. So just like the projected kind of power costs from the world's adoption of AI and everything, may have some question marks over it, given the energy intensity looks to be decreasing substantially.
Yeah, very, very interesting.
Fascinating.
Yeah, we'll keep a bloody eye on that.
Good for the world. Like if you just think about,
well, less energy is good for the world.
and we get more productivity, yes, it's a bonus. Yeah,
It's not about just making money out of uranium stocks. The world, like, depends.
Who'd have thought?
Who would have thought? So let's close that one off. Got to listen to the call, but that's
Yeah, keen to see. I mean, looking at the big tech side of things, I think the fall off in Nvidia stock is many multiples of all the uranium stocks peeling off combined.
a few BHPs. How much was it? It's for 16% of a fucking
$2 trillion fucking
2.9 trillion after the peel off.
Wow.
So it was
Yep.
well north of 3 beforehand.
Wow.
Yep. Super duper. So that's about a BHP and a bit.
And a bit. And a good bit, yeah.
US dollars.
Nearly an Exxon. Funny. Right. Next up, Bellevue Gold, BGL, ding, ding, ding. I have a position in the Steve Ray Fund for the BGL. So already reported their pre-quarterly and dropped their guidance, which we previously discussed. Dropped it from 180,000 ounces down to 150 to 165. So they've produced 62,000 ounces so far this financial year. They need 88,000 to hit the bottom end of guidance. They're saying it'll be a 40-60 split across Q3, Q4. So it's like back end half weighted.
Mm-hmm.
We're back end half weighted now. So I love the back end weighting. So that'll be 35,000 ounces next quarter, 53 in Q4. So to hit 53,000 ounces a quarter, they need to be at the 250 to 270,000 tonne throughput, which they're achieving. The mill seems to be it's getting the tons through, no dramas there. 17% of that was open pit dirt, so that probably helps lifting above that 250 because she's a bit easier to crush through. 92 to 94% recovery they need to be hitting. They've hit 94 this quarter, so that's looking good on that front. But they need about 6.5 to 7.2 grams head grade to sort of get, if you're upper and lower bounds, to get 53,000 ounces. If you mix all them together, that's where they need to be at. And considering the probable high-grade reserve is now 6.1 grams per tonne, so they're likely going to have to exceed that in Q4 to meet this bottom end of guidance. But we'll go into that reserve grade a bit later. So pretty much like all those factors, they seem that they've shown glimpses of bits of it during the past 4 quarters. 2 of those you'd probably say were still commissioning phase, like 2 full quarters. You'd say they've been in full blast, but they just need to string them all together to meet that guidance. Because if you look at the physicals, I'll bring them up here. Everything is moving in the right direction, other than grade. Grade has got absolutely hammered this quarter. So look, as I said, processed 276,000 tonnes, so that's well over the 1 million tonne per annum rate. 70 bit of that was open pit, so nearly 4,000 metres of jumbo development, and that was mostly with 5 jumbos. They've now got a 6th jumbo there, so that's heading in the right direction. The mine tonnes were nearly at the 1 million tonne rate, so 240,000 tonne. That's their best quarter on underground mine material and the highest amount of stope tonnes. But they said they had the 1 million tonne rate in December. Recovery's up to 94%. That's the highest yet. But grade 3.1 grams per tonne. So the reserve's 6.1. The total underground reserve's 5. So they've said, and they mentioned it before, they were going through the outer edges of the ore body simultaneously. Like you would have probably scheduled for this. It probably indicates that the development wasn't where it needed to be to blend the grade, which was probably stoping being held up.
So you kind of buy that. You just think it's...
Well, Well, you could infer that if they've gone through all those lower edges, then the next quarter or the next quarters, they should be going through all the high grade all at once, and they should see a grade spike. So that's a possibility. No mention of dilution or overbreak being a cause of the lowering in grade. With how hard the ground is there, I don't think dilution would be much of a problem, assuming that it's hard in most places. It's not probably hard everywhere. Like the hardness varies at mines. It's not just fucking one blanket hard. There's different patches. Could be drilling error. It could be coming out low dilution, but it might have deviated. Don't know. But it is a big drop in grade, which is a bit concerning. So we'll see how that is going forward.
There's then the point on power with obviously Bellevue have really focused on renewables. Bit of change in the thinking when they did the capital raise and they had to bring in a bit more power, right? What was the sort of
more power to get to that 1.6 million ton rate
as they scale up
eventually.
Yeah.
But they got that fucking there's a lot of power there. Like, is it? But it's like 27 meg solar farm, and then they're also getting another 6 megawatt wind turbines. That's like that's 50 meg of renewables. Then they've got the gas on top of that. So there is a shitload of power.
So it's obviously
it's distributing the power.
And you've got the point on capacity versus generation. You can't always get all that flowing through because the sun shines at certain times, the wind blows, these sorts of points that you always kind of hear. But that is a huge amount.
It's a lot of power. And they said they're in one day in December, they had 11 hours just on renewables, pretty much like engines off, which means gas off. No, obviously no diesel element start. Like it was just consistent solar. So I would assume that if they've spent the capital for all that, the operating cost of running on that much renewables will be lower because if the capital's been spent. But they're still, separating themselves from the peers for that net zero aspirations, which, I know the flavour's not as much, but BlackRock's a 15% shareholder. It would attract a lot of global investment for people that want a ESG credential gold miner, this is probably the best one of them, but a lot of capital's gone into to get it that way. So, I don't think they're going to be short of power to run a friggin'. I think something like Mount Magnet for Ramelius, that mine's like 8 meg, I think, of power from memory, something like that. And this has got 70 or 80? It's huge amount of power. It's distributing it through the places which needs it's the ongoing thing. CapEx for the remainder of FY25. Interesting point. They downgraded CapEx and exploration spend to 155 million from 175, but they've cited lower than achieved capital development rates in half one. So they're saying that they've saved CapEx by not developing as much, which is an indication that the capital development was not getting far enough ahead of the production, and I assume would possibly still be the case. So looks like the primary vent raises are nearing completion. So it's saying there's 2 raise bores that will be completed this half with no more currently planned. So that's a bit less CapEx going out the door once the big raise bores stop, and then that's going to be extra vent and everything, which was all bloody good stuff. So on the cash front, all known previously as well, they went backwards 25 mil. So they've got 81 mil in liquidity and 100 mil of bank debt, which is not due for payment till 2027. Most of the gold was delivered into the hedge book because of the lower amount of ounces. So hence the realised price was $33.39, so about $1,000 below the spot today. So there looks to be around 50 to 55,000 ounces to deliver in the next 2 quarters, as you can see here, and 2/3 of it is at 2,800 an ounce, and the other third is at the 3,800 an ounce collar. So any ounces they can get bloody above those chunks is going to make a big difference. So still $320 million out of the money, that hedge book, 196,000 ounces. So big out of the money.
Yeah, that's more of a
and it keeps going up.
More of a hiccup
usually.
More of a hiccup than the remaining debt quantum, yeah.
Oh yeah, well that's what, a $420 million liability effectively, long term. So there is on the street. It's all on the street. There is distinct bull case and distinct bear case for Bellevue.
It's polarising.
And you talk to different people, and people have got a very different view on it. So, and both of them are not out of the question. Both of them make a lot of sense.
Many views make a market.
Oh, isn't it? What? So, mate, it could be more sellers than buyers. Could be more buyers than sellers. Like the bull case. Let me go through that. Like infrastructure seems to be catching up or caught up. Physicals are all heading in the right direction. Like development meters are increasing with a lift in the stope tons. Recovery's up. Mill throughput's above nameplate. Potentially hitting a higher grade period after going through a lot of lower grade. Good ESG credentials, so you're attracting bloody good international investment. Like market cap 1.4 bill, so that's about an EV of 1.75 if you take into account the debt and the out of the money hedge book. So the EV is less than Regis, and considering the exploration upside and the high grade nature of Bellevue compared to the low grade at Duketon, like if you put a side by side there early in the operation, like there's a lot of and they're in a lot of valuation. There's probably not as much exploration upside taken into account. There's still a lot at that mine belief at depth and laterally. So,
and then the other side, Matty,
the bear case. Well, like any time you see a mine like this that was, I guess, going to be the next, like such a, what was it, 200,000 ounces for 5 years, but they're negative free cash flow in record high gold prices that were much above what they thought they were going to be mining at. That's obviously concerning, and like because they've overpromised, under-delivered since the get-go. Clearly, like they have to achieve over the high-grade underground reserve to meet the guidance. But when they did that plan update, remember the high-grade underground reserve was dropped from 7.9 grams to 6.1 grams. So will we see a 7 gram quarter again to offset the 3 gram one we've seen? Like, I don't know, jury's out on that. Like, they're adding another jumbo. Like, that'll increase costs, put more demand on moving the development dirt with the production dirt. Like, then they might have to add extra machinery to complement a one jumbo. I'm not sure if that is the case, but it is extra cost. Still got 40 mil of growth capital and exploration per quarter. Still got 4 wind turbines to build, and 420 mil of liability with debt and hedging. Will Macquarie put pressure on for that last 100 mil if they have another negative free cash flow quarter? Because I think we could infer that they put the pressure on for the last $150 million raise to clear a good chunk of the debt. Over half the forecasted ounces they're going to produce aren't exposed to the higher gold price. So could go either way. And if they will, like in the position they are now, look at what happened to Regis. Like just the narrative of Regis changed so quickly from clearing I know it's like gold prices really freaking helped them, but it's like they've cleared the hedge book, debt-free, and they are just flying in a matter of a year. Like, would Bellevue need to do a big stonking raise to clear the debt, pay out some of the hedge book, and just change that narrative of risk that is associated with them? Whether that gets done or allowed.
Bit of pill after the raise.
Oh, it'd be huge, but or will they be made to?
The 3 big gold producer underperformers last year were Bellevue, Gold Road, and Regis. Now, since about, call it September, October, Gold Road and Regis have both, outperformed. There's a bit of a mean reversion. People are seeing the long term. For Gold Road, they're seeing the long term. The strip ratio is actually going to kind of decline after FY27. Some of their issues have been resolved, which led to that underperformance. And in Regis's case, the cash generation subsequent to the hedge book pay down and higher gold prices have helped the market rethink what is appropriate value.
This is cash kicker for Gold Road on De Grey as well.
Well, and you think Regis more so, they've done it with the McPhillamys and everything considering that, so they've really turned it around.
This is the one that hasn't been reverted yet. There's not yet the positive story to wrap around it for the market to back it in mean reverting on a performance basis.
And that narrative was supposed to be the 1.6 million tonne expansion for the future, but I don't think it's stuck.
It didn't resonate because on the one hand, the market is reading that there's challenges getting the tonnes out of the ground that are required because of the complexity, and then on the other hand, looking to increase the throughput. Surely that puts even more stress on getting tonnes out of the ground. Which
I think people read through that very quickly. That they understood that was a narrative you wrapped around a capital raise, because you always have to wrap a narrative around a capital raise. You can't just do it because things are shit house, Yep. You do it because there's this growth opportunity and we're going to make even more money. But people read through that super quickly.
Yeah, and I think that and there's no open pit material going through the mill next quarter either. I think they said that they're going to be full underground feed, which is good for grade, hopefully, but you need the underground feed. And look, they've hit it in December. They've got to string it together for 6. It's just, will they be more acquirable if they've cleared a lot of that shit out? Like, imagine that out of the money hedge book and the debt. A company would rather them sort it out than sort it out themselves if they acquire them, because it doesn't just go away.
Yeah. It doesn't go away, but everyone has an out-of-the-money hedge book to an extent. Obviously, this one looks worse than most. The debt isn't surmountable. I mean, 1.4 market cap, you said. They've got 80-odd in cash and 100 in debt. It's like, I could easily see, on the other hand, 2 quarters of decent production and people are just looking at the blue sky again. They've forgotten about all the troubles. They're, looking down the track. They're starting to see more of that $4,000 and a bit Aussie gold price as the ounces start to come through. So, like you said, it's awesome for us because it's in that sort of balance point. And, it could kind of go both ways. But for an acquirer, you're not going to be stumbling over that hedge book and that portion of debt, given everything that could go right. If you think you can get people in there, make it humming, get the ounces out the ground, that's not going to be a massive impediment in my eyes.
But don't you think that if it's still there, the acquirers would think, is there a bit, potentially, it's more risk and they might get them cheaper because there might be a bit more pain to come?
People do think that, yeah. On the flip side, like, to the extent the market's punishing you because your own funding dynamics are in doubt, you're going to have to dilute more. That, like, if you're trading at a discount because of that, that's the opportunity when your peers kind of get acquisitive and think, they're trading at a discount for an issue which we solve on day one because we've got balance sheet.
Yeah, to draw on the string that, Trav, you mentioned just before, in the context of the gold market where everything else is pretty expensive, we're talking about these kind of unheard of deals that are assets with a bit of hair on them. They're the only ones you can kind of find now. Finding one like this, there's not many peers that are so beaten up trading at half of what they were trading a year ago. That's like, that'd be putting it near the top of most people's kind of shopping list, I'd say.
I think so.
There's still a lot to like, and there's a lot to to iron out still. But like you say, those are diverging opinions, and the path dependency is very interesting.
Yeah. Yeah. Oh, it just excites me. I know they don't want me talking about it properly, but it is such an exciting stock, I feel, for all those reasons.
100%.
So, can you, speaking of the bull and bear case, can you actually come up with a bear case for using Saltbush as a mine to mill specialist? Is there a bear case of why you wouldn't use them?
I can think of a bull case. It's a big bull case, very bullish.
Well, the
only
bear case I could think of is that you will exceed guidance by too much. Yeah. And it'll look like the market will perceive it as that you've tried to keep the share price down to line your own pockets.
Get an ASX speeding ticket.
And it's like, that's the only bear case I could come up with. But the bull case, as you said, Trav.
Overproductivity from your haulage contract.
Oh, mate, they just love moving tons. Mate, they love driving tons. They love building a road for themselves to move the tons. And they love doing any random shit-ass job on a mine site that will help towards Saltbush moving tons for you. So it's the best analogy I can come up with. I'll bring it up here. They're like a chain link fence. See those posts? Yep. They are just, Saltbush are the posts that keep the fence growing longer, and they keep the fence up. They are integral to, they are the structural dependency for your mine site. They are.
That analogy reminds me of how you describe, your impact in a mine site, Matty. You would lift everyone else up. You're so, it's the spirit that gets everyone else more productive.
There was the occasional bloody cyclone Sean that come through and knocked the fence over, but most of the time I was just good for morale.
Just turning up, eh?
Absolutely zero natural talent and zero skill, but good for morale. Go Saltbush. Right, speaking of fucking tons, Fortescue is buying Red Hawk Mining.
Big. Well, it's not massive from a quantum perspective, but it's a big in the context of Fortescue doing public markets M&A. Like for a WA iron ore stock, I find that super, super interesting. And in a nutshell, Red Hawk Mining, they've been progressing their Blacksmith iron ore project and they're now set to be gobbled up by Fortescue. Red Hawk's board has agreed to this bid, so it's an agreed deal. It's a cash takeover for $1.05 in cash, but there's a kicker if they get 75% acceptances within 7 days, then shareholders will get $1.20 per share instead, which would imply a market cap of Red Hawk of $254 million for the Blacksmith project. There's a few elements of the deal structure worth kind of wrapping your head over, and I'll get to them. But for now, take a look at the Blacksmith project. This is it's one I've talked about a couple of times on the potty, and as far as ASX listed iron ore development projects go, in my opinion, this one is the pick of them. You see, I've put a map up here where you can see the location of their Blacksmith project in proximity to like the rail networks of the majors in the West Pilbara there. I've coloured the rail because they weren't coloured in. So Rio's is red, Fortescue's there is blue, BHP's I've put in orange, but it's pretty far away. And you can see like Blacksmith is relatively close to both Fortescue's Solomon Hub there and Rio's rail network itself. And what's not on that map, but I've drawn it in on the left-hand side in purple, that's where MinRes's whole road kind of ends at the moment around Ken's Bore. So what's the attraction of Red Hawk? It's all about grade here with their Blacksmith project. So they've got 243 million tonnes at 59.3% iron across the 5 deposits in the project, but a lot of that comes in well north of 60%. And there were sinter samples in the last quarterly of Red Hawks, which showed 61.1% iron for years 1 to 2. Remember, this was framed as a DSO project, so that's not beneficiated, not concentrated. So that's just crushed, and you get your 61.1% iron for the first couple of years.
Fortescue won't know what to do with that sort of grade.
Yeah, it'll be a small contribution to their everything overall, but it's like it's a sugar hit, right? Because you can help lift everything else up, and because Fortescue's facing declining grades at their projects, like all of them, the majors are. This is a big theme that's emerged in the last year or so. If you look at Red Hawk's PFS on Blacksmith, they released last year, ticked a lot of boxes. Strip ratio 1.63. It made decent money, even assuming that they would haul at 450 kilometres to Utah Port for export. That's a really long haulage route, which you could see in the study would equate to 59% of their US $51 per tonne C1 operating costs. So it's not hard to see the synergies on the table by utilising Fortescue's existing rail network, and they've got like a plant like 30 kilometres away and just sort of shrinking the OPEX. You got the sugar hit 50 tonnes, but what's more is Red Hawk, they in their PFS they limited the mining to 5 million tonnes per annum in the PFS. But if the rate at your mining was restricted for haulage reasons or port capacity with a constraint, then Fortescue could produce more than that per annum from the Blacksmith project if they wanted to as well. I'm sure they'd rethink their production capacity.
Yeah, absolutely. With that cap gone, you can sort of change your thinking completely. So how do you think about Fortescue's needs going forward? You obviously talk about the declining grades, massive theme. We've heard Rio talk about it heaps. We've seen it at length, but put it in the sort of Fortescue context. There's
like, I reckon three points why Fortescue need this. Number one, approvals in this project are actually super advanced. Number two, 90% of the mineable inventory is above the water table. Big issue is kind of mining below the water table becomes more expensive. What do you do with the water in the Pilbara? And the third, this is by far the most important, just the grade decline, like you speak of, JD. I just wanted to bring up Fortescue's production from the last quarter. So just for context, back in financial year 18, Fortescue got smashed on their price realization front for its lower grade product. Remember, their products are generally between sort of 56%, 59%, versus the index is like 62%. And in FY18, I think their realization was as low as 67% of the index, which is like super low. Might have even been lower. So they, subsequent to that, they publicly have been embarking on this strategy where they plan to bring online substantial higher grade production to combat the realization punishment that they were having back then. That realization punishment is moderated a fair bit at the moment, but the two parts of that strategy of getting more high grade production into the mix were magnetite concentrate from Iron Bridge, and the second one was bringing on high grade fines from West Pilbara once Aliwana came online. Between those two sort of facets of it, West Pilbara was supposed to contribute 40 million tonnes of high grade fines, and Iron Bridge was supposed to produce 22 million tonnes of high grade concentrate for a total of 62 million tonnes of high grading in quotation marks iron ore production per annum.
It's not been going great, has it?
On both of those fronts, there's been big challenges. I'd say. Look at the production numbers in the quarterly. If you just annualised the contributions of West Pilbara and Iron Bridge is still ramping up, but doing an annualised rate of only 6 million tonnes per annum right now, and the West Pilbara fines doing an anemic 14 million tonnes per annum annualised. In the case of that product, there's been heritage issues which have really limited production areas that they were actually hoping to bring online post kind of Juukan Gorge. On the flip side, I'll bring up the production by product again, but this time you can see the difference versus a year ago. And what I've highlighted there, like look at the tons of super special fines produced. This is FMG's lowest value product. It's like the really low grade crap fines.
It's like the SP10 equivalent of Rio, like lower grade stuff.
Lower grade and also fines, so you get kind of doubly punished. It's pretty shit. Yeah.
It's even worse. Like the norm for Fortescue sits much below the classic Pilbara blend, which is a 62% product.
Yeah.
That Rio have prided
Low
themselves.
silica.
Yeah.
Low phosphorus.
Yeah.
Yeah. I mean, all the tenements in the land that the whole Fortescue narrative was built on was tenements they picked up because the other majors kind of had the thought that it was not really feasible. It was too low grade. But then China came along and the whole playing field kind of shifted.
Yeah.
But super special fines is a hell of a name to give your worst product.
Yeah, special. But what you can see just like on those arrows I've drawn, so the Fortescue blend, which you mentioned it's higher grade than the super special fines, that's like declining kind of commensurate with the amount that the super special fines production has kind of increased, which again is speaking to the whole, and they're pretty big year-on-year moves, but it's speaking to that whole declining grade. You're producing more of your lower value product, and then the price realizations are going to hurt you more if that kind of trends the direction it was in 2018 again.
I think a bit of a call out, which would be an interesting episode, would be on the products for Rio, BHP, Fortescue, because I know I've actually got a fella on my street I've been doing a bit of digging about, like just, because Yandy's a standalone product. Robe Valley's similar to Yandy, but it doesn't go into the Pilbara blend because they're higher silica and I think it's low phosphorus, but Japanese smelters like that product and there's a market for it. So if there's a bloody iron ore guru, I'd love to have a yarn about that in detail about the different products.
That'd be fascinating. I think there's an equal chat in coal to be had, just like we had with aluminium with regards to bauxite and how specialised it is for the specific plant that it's going to. And I remember after I spoke about it, talking about Rio's shift down the grade curve with everything that's gone on. I had some awesome feedback from people that have spent years just studying this stuff. There's a wealth of knowledge for these people that some people here in WA have, given they spend their whole career just looking at this stuff.
Like the index is 62%, which is supposed to be, the
like
Rio's
C6.
Yeah, it's supposed to be Rio's Pilbara blend, but they're like doing And they're lucky if it starts with a 6 these days from that Pilbara blend. I think it's kind of been, get going lower every time itself.
Well, like it's your old school, like your Tom Prices and all that. Like they're getting, they're getting mined out like Hope Downs. Like they're all getting, they've been going a while. And then like, your new ones like Robe Valley and what is it? Goodadari. And yeah, and then they're the Rio ones, and they're obviously Rio move the most. It's all very interesting.
And the other point you made on heritage and just getting approvals ties in with that massively, because part of the reason Rio talk about declining grade is because they haven't got approvals. What they thought they'd get years ago is only now coming to the fore. So it all goes together, and there's a very interesting discussion to be had on that.
Fortescue's meant to be doing 3 times the rate they're doing for the West Pilbara, mine that they brought online, and it's the reason they're not is because they had to rethink their production areas due to heritage. This is a common theme we've heard it speaking to people at Rio, BHP, at Hancock. Like this is just a big theme, and driving grade decline, higher costs, and you got to mine into the water table as well, which adds complexity.
Yeah, well, I think cloud break for Fortescue, that was like freaking wet, notoriously wet. So that must have been below the water table. That's the ones they pick up, and it's a double whammy from this has been going on for years. So you can bet your bottom dollar most of the high grade has been taken. It's not going to just magically pop up under exploration. I think BHP, Rio, and the like know where the high grade is or was. But then you double that with the heritage stuff these days compared to when they built a lot of these projects. It's
bigger timelines, higher royalties,
huge increase in the importance and the complexity of it.
Yeah. And if you can pick up something like Red Hawk's Blacksmith, which is advanced approvals, higher grade, maybe even in Fortescue's case, they could if they wanted to beneficiate it at their facility, if you're just 30 k's away or whatever, then they can get a fair bit higher grade out of it too if they wanted to. But it's a sugar hit, right? It stacks up. When I saw the deal pop up, I had in my head that this was a project that was on Unrest's shopping list eventually, because they had ambitions to unlock a lot of the stranded iron ore deposits. It would have made sense from an OPEX perspective. It would lower the OPEX versus the PFS if you could put it on the whole road and the whole road kind of got extended, or maybe you found a different transportation route to get the ores.
From Red Hawk's perspective, that is.
Yeah, or just whoever like. You would lower the OPEX to send it on the whole road from Red Hawk's perspective, but it's also going to have low OPEX again by putting it on FMG's rail, which is right next door.
Yeah, it'd be lower on the rail, wouldn't it?
100% lower. Yeah, but if you were
absolutely, But from the MinRes perspective, keen to hear your thoughts. Obviously, it's one of the big questions we have is can they get the tons that they already have over the whole road?
Yeah, let's see what happens there. I think a bit of time will have to evolve before we see what the whole road can sustainably do and all that sort of stuff. But the one of the considerations is, again, this is higher grade than what they will be mining from their West Pilbara iron ore project in general. There's pockets of higher grade and all that sort of stuff. But yeah, this would be a sweetener. I'm sure Mins would have loved a scenario where they get mining services contract and yada yada yada, all those sorts of things in a JV. But yeah, the reality is, I think it didn't happen. I just doubt that Mins are kind of in a position to do anything that's particularly, particularly chunky at this point in time. They're just, max pressure on the financial front. Ding, ding, ding for Ali GC.
I was just about to say, we've just had a live feed update in the notes. Ali GC, ETF and MinRes. Go, Jay. Go, Ali GC.
I'm with you there on the MinRes thoughts, but we've spoken at length about them. Let's get into the structure of this deal for a minute. Kind of
snazzy.
Yeah, interesting how it sort of come about and how it's prompting people to take quick action.
I liked it. I like the structure. It's a bit different. There's a few parameters which would be big consideration for the bankers behind it. Namely, like Red Hawk has 2 shareholders which account for 82% of the shareholding, which is you don't see that every day of the week. Think of them as Todd. They've got 60.7%, and OCJ has 21.2%. So Fortescue would, hopefully be able to wrap things up pretty quickly if those 2 shareholders are on side and accept. Hence, what we see is those 2 shareholders they've been, crossed in some capacity on the deal because they have both signed call option deeds with Fortescue for a portion of their shares, which would allow Fortescue to buy 19.9% of Red Hawk from them for $1.05 per share. The piece of the deal that makes it accelerate, though, is the uplift in offer price if Fortescue can get 75% acceptances in 7 days.
Which is those two.
That's all you need. That's all you need, right?
Who's Todd?
Yeah, you gotta tell me.
It's just a bloke.
It's like TONZ, but they abbreviate it as Todd. But it's like, I've got to look into it one day.
Yeah, right.
We'll definitely be looking into that.
Is the MD made?
Not a major shareholder, but
right.
has shares. Yeah. Now, what all of this means is that there's a very high probability that those two shareholders, they're going to accept the offer in 7 days' time. Now, they haven't provided an intention statement here, but if they've been, crossed on the deal, I think they've both got board nominees as well, both the shareholders, and they've been crossed on the deal in some capacity where they've signed call option deeds. You'd imagine, like I'm inferring, that they're going to accept into it in 7 days' time. All that means to say is that like an interloper has to move stupidly fast from here to stand a chance. You've got to mobilise a lot of different work streams in order to kind of, publicly announce a superior proposal or bid that is, capable of acceptance in some capacity, which I think is just it's an intentional structure to mitigate that as an option, and we can think of examples in the past where people have disrupted deals. We've got billionaires in the state who have exposure to iron ore who like disrupting deals.
Maybe you'll see Delphi rock up like a minority holder.
Yeah,
they might be mates with old Todd.
Who knows? Anyways, it's a kind of clever mechanic. We'll see how it plays out. The last tidbit on the structure that encourages an expedited time frame, though. I read that Red Hawk, they ran a strategic process after the PFS. So this was like a put out to financing parties, offtake, blah blah blah, iron ore producers, exploring the full gamut of ways to go into production. And the offer from FMG was the best of that strategic review process that was run. So they've launched this approved deal already with an independent experts report in favour of the transaction. You rarely see that kind of component sort of done before an announcement. Hence things are capable of just being over pretty damn quickly on this front. But if you just zoom out, like the big story here is that declining grades. And I just think there's a lot to that part of our industry, has a lot of flow and implications, and something that I think we've got to do some work to pry into over time.
Correct me if I'm wrong, the MD of Red Hawk also did the Vimy deal. He was MD of Vimy.
He was.
Which Deep Yellow
Mr. Michael.
Yeah.
So, geez, he can pump out a deal.
Yeah.
Done very well.
I think he came into that from the FTI side. I could be wrong.
But he did the deal with Borshoff with Deep Yellow and now doing one with Twiggy.
That's right.
Good on you. Oh, speaking of the majors, we've talked about the majors. I was just on the phone to the landman.
The man himself.
Speaking of a man that deals with majors, do you know, for any people that don't know, that's Matty Hall from Get Wet Solutions, the Australian landman. He's informed me that the landman and Get Wet are now in the rehab game with the majors. Rio Tinto.
Rehab.
What sort of rehab?
They're bloody. It's a good rehab. It's installing a Get Wet bladder to assist with the irrigation requirements for rehabbing post mining. So, even when mining finishes, Get Wet are still the key ingredient to a mining operation. That is all I can say. And they're dealing with the majors.
That's bloody awesome.
Of course, the landman is going to work with the majors. So
very impressive.
Not just Rio either.
Yeah, and Rio obviously knew that Get Wet are the only company in Australia that supply and install the bladders, Get Wet bladders. So just Rio getting wet. I would suggest you get wet as well. Thank you.
Get wet.
Go landman. He answered the phone. He's like, "G'day, landman here." So good. JD, on a bit of a more somber note, unfortunately, a bit of unrest in the DRC.
Yeah, there's been conflict intensify in the eastern part of the DRC. Pretty sort of sad news. It's an area that's had conflict for quite some time now on the border with Rwanda. So we'll sort of flash up a map where it all sits. I'll give a bit of context briefly on the conflict, all sort of sourced from the major news outlets, and then tied in with how it's kind of relevant to the money miners and the sort of companies and the mining industry. It sort of plays a significant role in this area, and we'll touch on Alphamin specifically. So to hone in and give the context for the money miners on what's going on here, you've got the city of Goma in the eastern DRC. It borders with Gisenyi, which is on the Rwandan side of the border. It sits on the shores of Lake Kivu and just to the south of an active volcano within the Great Rift Valley, which is a sort of corridor which people will refer to, runs north-south through the area there. Decent-sized city as well, 2 million people is the official population. You've got over 500,000 people that have been displaced living in that area, and looks like they're sort of moving again now because of everything that's gone on. But it's a pretty sizable number of people that live in this area and that have been disrupted by the regional conflict that's gone on for some time there.
Yeah, so what's the history, like the context of why this conflict, why it is happening in the east there?
So I'll keep it brief, mate, because there's a super long history that people can chase up online if they're interested. But essentially yesterday, the DRC's foreign minister accused Rwanda of a declaration of war after this group that people may have heard of, the M23 rebels, claimed to have seized the city. Rwanda reportedly hasn't denied that they backed this M23 group, but they accuse Congolese authorities of supporting various other militias trying to topple their own government in Rwanda. That rebel group, M23, they've been fighting the Congolese army as well as UN peacekeepers in the region there for quite some time. The DRC sort of replied by cutting all ties with Rwanda, calling for sanctions to be placed on the country, although Rwanda just flipped it the other way and blamed the DRC for causing the escalation in tensions in the area. So you've got the UN chief, Antonio Guterres, calling for Rwanda just to pull their troops out of the DRC, but Rwanda pretty quickly rejected this. So that is in 30 seconds what's kind of gone on there. Plenty still unfolding, and the president of each country is going to meet on Wednesday to try and peacefully sort this out, and let's hope that can happen. Just to go back a little bit though, this has happened before. In 2012, this same group, M23, seized the city of Goma for about 10 days, then there was an agreement and things settled down for quite some time. But yeah, thousands of people have unfortunately passed away and over 1 million have been displaced throughout all of this. So long history there that, not quite the right forum to chat about it here.
But so DRC is freaking it's huge. It's not it's not like a bloody New South Wales or anything. She's pretty big, so...
Massive. So this is way away from the copper operations that we've often spoken about in the south of the country. It's massive as well as thick jungle and mountainous at times as well, Maddie. So long way away from all of that. But you don't have the copper mines, but you've still got mining, a lot of mining that goes on in this area, although a lot of the operations here are artisanal mines, very small operations. It's not your Glencores, CMOX, and these sorts of groups that operate in the eastern part of the country. But you're getting decent amounts of tin on a global scale, tantalum coming out, a lot of artisanal gold mines in the area, tungsten. So a lot of these minerals come out, but artisanal mines, they get smuggled across the borders. They go out eastward and into the global market. And the narrative is pretty similar to what a lot of people think of cobalt, which happens again in another part of the country. But the execution of it with people taking their cut along the way, a lot of middlemen, is similar in nature.
There is one major mining operation that's not too far away from Goma though, and that's Alphamin's Bicey tin mine, which, similar to the reasons you're interested in Bellevue, single asset developer. Lots of, and whenever you hear the bear case on Alphamin, it's people number one on that list is the M23 rebels.
Yeah, 100%. And
one of the only pure play.
Yeah, one of the investable, one of the two, Western listed investable stocks, you'd say, yeah.
Do they produce as much as Renison?
More.
Yeah.
Okay. And have growth, whereas Renison, arguably doesn't have as much growth, yeah.
Yeah.
So we're talking in the ballpark of 20,000 tonnes per annum of tin, with people hoping that gets to 25 over time. And just to throw up a few maps here and show kind of where the conflict is, and you can see sort of various artisanal mines that have been militarized with these groups kind of taking control of these artisanal mines so that they get funding to run their operations. But the Alphamin project sits much more to the west, and like I said, up into the mountains through kind of jungle. So it's not easy land to sort of just get across to. And that, from the Alphamin perspective, definitely minimises the risk of the mine itself being taken. I don't think that's going to happen. I think there's quite a way away, and I don't think that's necessarily the interest. While M23 will definitely want to get their hands on some of these small operations to fund what they do, getting their hands on an Alphamin is, not a high probability event the way I kind of see it. And yeah, to kind of support Alphamin for a moment, having Western reputable companies there that support the communities, they pay for a lot of people, is a huge positive, and it's something quite awesome that Western miners can go and do with high standards. Obviously, we sort of talk about it being harder for Western companies to operate in parts like this, but there's a lot of positivity that these companies can bring in going there. So that's something just to underline on Alphamin. So I'll flash up the map here, and you can see, again, looking at the logistics, you can see the red dot is roughly where the operation that Alphamin have is. You can see highlighted to the right is Goma, but they don't actually get a lot of their supplies from Goma. What they're kind of doing is they're sending stuff outward, and then they send it to the northwest, to Kasangi, and then across in the sort of eastern direction to Beni, and then outward to the global markets through Uganda that way. So they're not heavily reliant on the roads that come through from Goma. It's a pretty poor quality road. People previously flew in from Goma into the operation. They weren't driving on that road, although the company did have a small satellite office in Goma. So just to kind of clear up that point, logistically, they're not super reliable on that pathway through the country.
Their actual, the ability for them to ship out the tons and also access in is not direct via Goma at all.
Yeah. That's right. So, I mean, on the fringes, there will be some sort of disruptions, but that's not a massive disruption like a key road coming in that's going to cut them off from everything that they needed.
But the share price fell down, mate. Is this another kind of, typical, Western markets get a little bit fearful, or is it just, broadly they've been somewhat resilient given the market turmoil today anyway?
That's the big question, right? So down 13% for people that didn't see it. I think this one's quite different to what we spoke about with like Resolute and Marley for, partly the reasons I just outlined. I don't think the Rebel group gets that far in. So many people wouldn't have invested, and this is the big risk they kind of pointed to, right? Something like this was going to happen. Specifically, the M23 group was going to come and disrupt the area and do something. So if you're an Alphamin shareholder, you're probably thinking, hey, it could have been a whole lot worse than the share price peeling back 13%. It's not all flowery. I mean, the small chance of M&A happening, I think, has gotten even smaller. I don't put many odds on people coming in and scooping them up. Who comes in and bids the stock in the meantime? I think it's going to take a little while for people to forget about this, for this to sort of calm down.
No, they'll see the dividend in April and they'll buy.
Exactly. So you're getting paid to sort of wait. If you are a shareholder, I think you're talking Canadian 5 cents, maybe plus, on a 93-cent stock as a dividend in April. That's 2 and a bit months away. So that's not bad payment for just holding the thing. And then you've got that optionality. The tin price narrative is intact. Matty, you asked me if the tin price is going to sort of rocket before we started recording. I don't think there's a massive change to what amount of tin is going out to the world market with these sorts of events. So I think
the tin's still going out. It's just who's getting the money for it might change.
Yeah. So from a global perspective, I think it's a relative like non-event. It's not like a massive mine going offline. So I don't think Alphamin shareholders will be fretting massively. I think this is the first question management have always been asked, and they've been well prepared, and they would have been talking their shareholders through what kind of goes on for for a long sort of time. It was pretty interesting to see that they didn't put out an announcement on the back of this. We might see one, you know, in the next few days, in the next little period when, like, these guys are Joburg as well as TSXV listed.
Reminds me of WAF last time there was a coup. You know, it's just don't feel the need to put an announcement up. This is part and parcel with.
Has there been many of these like events, or is this a similar to WAF in terms of like risk or risk on moments with these rebels?
Probably different to WAF. I mean, they've supposedly taken a city, these rebels, which is the you know, nearest big city to the mine, but for the logistics reasons JD articulated, probably not a big threat to the mine, and also the historical precedent is that the rebels have only taken the city for a maximum of 10 days before the, you know, pressures have been sufficient enough for them to not take the city.
Yeah, and I mean we've stressed this before. We've stressed it in the context of WAF and so on. But like the advantages that these guys bring to that part of the country can't be understated. They do an awesome job. They employ so many people in the area. So many people along the logistics routes rely on this. It would be very detrimental to that area for thousands of people, and, you know, many thousands who are indirectly supported by the operation were that to go offline. That said, that's not stopped people in the past from doing things like that, but there's a lot of reasons for everyone to keep this operation going and keep things humming. So, yeah, I think shareholders will have that in the back of their mind, and I think things were sort of steady for the interim period, and yeah, I think they'll be focused on that dividend, like you say, Trav, coming through in due course with the optionality of the tin thesis playing out in the background, which gets every tin baron pumped.
You'd love to see him as disperse some degree of the risk geographically. If the trouble is, there's just not another tin mine to own in a different country. Yeah,
it's such a small number of investors that can buy the stock as well.
Yeah.
It's, you know, you're never going to get those awesome sort of multiples, unless you get to a scale where you can diversify out of the place, and then it's going to be probably a lower quality project. So it's one of those ones. So you kind of have to be content with how you get compensated by the returns and dividends as being an owner of the project. So
very good, very good, very good everything there, JD.
Thanks, mate. It's an interesting one.
So
let's
correspondent.
Yeah, let's really hope that that can sort of safely and peacefully just cool down in that area.
I assume you two aren't going there to Alphamin.
We're flying into
Lumbumbashi.
Copper
Harbour South.
Best of luck, boys. I'm going to be nice and safe here. Righto. Speaking of safe, Mineral Mining Services delivering your open pit tons. Safe as a house. Grounded. Ooh.
Speaking of safe houses.
Safe houses, grounded. Sandvik Ground Support.
Keep people safe is on the T-shirt.
Oh.
CRE Insurance.
Do I need to say any more?
It's in the name.
K-Drill. I've got it written here. Safe, reliable and productive surface RC drilling. So safe.
DaveSat.
It's just a safe bet to do the geophys before you do the drill and just make it easier. Saltbush Contracting. I've seen how safe they are. Mate, bloody, it ain't rip tear bust contracting. It is blue chip contracting with Saltbush Contracting. And, well, Get Wet Solutions must be frickin' safe if they've got a Rio Tinto vendor number.
They're not easy to come by.
Righto. Udaroo Money Miners.
Udaroo.
Stay safe.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.